So we were supposed to start this interview about 10, 15 minutes earlier, but I understand we had competition with John Lee, the Hong Kong chief executive, wanted some minutes of your time. Indulge us. What did you guys talk about?
Well, it was a really good conversation with John, and he really reinforced his commitment to continuing to develop the economy of Hong Kong. Very much focused on how we build new momentum into the economy. And that's what this conference is all about, the Global Investment Conference. It's really all about connecting the economies of the world. And we've got over 3,500 delegates here this week, over 1,100 financial institutions from around the world, over 40 countries represented. And we got over 250 corporates presenting to those financial institutions. In total, I think there's going to be around about 5,000 bilateral meetings taking place between institutions and corporates. And the whole purpose of this is to talk about the development of the world economy, particularly here in Asia and particularly Hong Kong. And that was the conversation that we had with John before the summit.
Yeah, he did mention that, developing the wealth management sector does remain a policy priority, which of course it's a very, very big business for you guys as well. I just want to get a sense really of, there have been some polarizing comments around Hong Kong, and not to get into the politics, of course. For one, Stephen Roach, of course, of Yale, Morgan Stanley, ex-Morgan Stanley, said Hong Kong is over. That's one extreme. I would imagine the bank has a different position. Now, to say that nothing has changed with Hong Kong would be a disservice. How do you think things have changed? And what do you think people have to keep in mind as you do business here?
Well, let me just give you some facts. If I look at what we did in 2023, the performance of our wealth and personal banking business here in Hong Kong, we saw significant customer acquisition growth. We also saw around about a 50% growth in our insurance and wealth business in terms of the new business they were writing last year. So the facts are, wealth management is continuing to develop and grow here in Hong Kong. The liquidity base here in Hong Kong today is higher than pre-COVID levels. So I still see Hong Kong as a vibrant financial centre. Capital markets are subdued at the moment, but that's a function of still coming out of COVID, economies waiting to recover. What will inflation and interest rates do? But we're seeing some early signs of the debt capital markets starting to pick up as well. So the facts, I think, support the fact that Hong Kong still is a vibrant financial market.
Right. Now, I know you're set to report your first quarter earnings in a couple of weeks, so you can't get into the details as well, but we just wrapped up, of course, the calendar quarter.
Yeah.
If you could also indulge us, how do you think the quarter went for you guys, generally speaking?
Well, 2023 went extremely well, over $30 billion of profit, a record profit. And that's a culmination of the hard work of our colleagues over the past 4.5 years, and also the loyalty of our customers. They've been very supportive of HSBC as we went through COVID and transition. Our returns were the best for over 10 years. And our dividend at 61 cents was the best dividend for 15 years. So I was really pleased with the performance. We're never complacent. We're making sure that we're well positioned for the future, and we're continuing to invest in the business. We're investing in wealth management here in Asia. We've done a number of acquisitions to do that. The most recent one that we announced was the acquisition of the Citibank wealth management business in mainland China. We bought an insurance business off AXA in Singapore, and we bought an asset management business in India. And again, just to put it into context, every region performed well last year, and every business line. In India, we made over $1.5 billion profit. If you put BOCOM and our own shareholding of our own bank in China, we made over $3.5 billion profit. So well-distributed profit across the world, and all parts of the bank doing extremely well.
Suffice to say, is $30 billion the minimum target this year because it was such a good year last year? Do you think you'll surpass it this year?
Well, nice try, David, but I can't give profit forecasts at this stage.
Well, okay.
We're in the close period.
Okay, well, let me take some of the guidance you guys mentioned in the previous financial statement, which was you're looking to at least make $41 billion in net interest income this year so far.
Yeah.
That was on the assumption of rates 2-3 months back.
Yeah.
It doesn't seem rates are going to come down, though, substantially this year. And I'm wondering whether 41 is a conservative figure from you guys?
We will update our view as we go through each quarter, but we hold that guidance of at least 41 billion. I think if you look at consensus at the moment, it's probably got us in at around 42 billion, but we will not update our guidance until we do Q1 results.
Right. Q1 results are coming out. I think people are expecting that special dividend from the divestment, of course, in Canada as well.
Yeah.
Do shareholders still need to vote on that? Or is that a done deal? Is that money in the pockets of shareholders at this point in time?
No, the board have to make a decision with the Q1 results on that dividend. It's our intention that when we look at Q1 results and we close on that quarter, it would be our intention, if the board feel comfortable, to then pay that special dividend of 21 cents. And that 21 cents is very deliberate. That's a very important catch up on the dividend that we cancelled a few years ago during COVID. And I want to actually reward the loyalty of our customers and shareholders. And remember, many of our shareholders are retail customers here in Hong Kong. And therefore we want to pay that special dividend.
I remember that meeting a few years back.
Yeah.
Speaking of divestments, we've done some reporting on your plans around your assets in Germany. I was wondering if you could comment on what your plans are for those assets.
We remain absolutely committed to being an international wholesale bank across all of Europe, including in Germany. So there's no change to that.
So those are not for sale?
Those are not for sale. We have some business lines in Germany that are non-essential to international wholesale banking. And we're considering options for those, and that's what the rumour and the speculation was.
Right.
But that is not about our international wholesale banking proposition or corporate banking proposition in Germany.
Thank you for clarifying. Assets in Russia, I know the bank has also been looking at that. If you could give us an update on whether those are actually up for sale and when you want those.
Well, we
have a price tag for them.
We have regulatory approval to sell that business. We're going through the final stages of trying to close that transaction, but it is our intention to sell the business. We have regulatory approval on it, and we're in the process of trying to close that transaction.
Okay. Since we're here, I want to ask you about China. And you mentioned China already. I know you've done, the most recent transaction was the city's wealth management business. That's been fully folded into the business at this point in time?
We haven't yet closed. We're closing shortly, so we've agreed the sale. We're going through regulatory approval, and that transaction will close. But let me bring you back to our business in China last year. HSBC China made over $1 billion of profit, and it grew its profit by 9% last year. So last year, some commentators would say, was a challenging year for China, but we still managed to grow our business. And we're one of the jobs that we always do and have done for nearly 160 years is connecting the world. Our role as a bank, as an international and global bank, is to connect the economies of the world. Those economies are changing. The patterns of trade are changing. The patterns of investment are changing. But we firmly believe that it is not deglobalization, it is reglobalization, and the patterns of trade are changing, and we'll help our clients and we'll help the economies of the world connect in the new form.
Right, and people talk about de-risking, for example, between the two global economic superpowers. You see the data because you're a global trade bank. You see these flows and you bank these transactions. Are you seeing any signs of decoupling actually between the two countries?
No, but trade patterns are changing. I think one of the lessons of COVID was supply chain concentration caused resilience issues. It's not just geopolitics that are changing trade patterns. It's also domestic economies are changing. The trade route between the Middle East and Asia is much more vibrant today than it would have been 10 years ago. Saudi Arabia presents huge opportunities for Asia corporates to trade with Saudi Arabia. So too the UAE. Very dynamic economy, growing strongly. More and more dialogue is happening between the Middle East and Asia than would have been happening 10 years ago. That's the nature of trade. It changes. And we're here to connect the new trading patterns going forward.
It's certainly become a very dominant part of the conversation, these links between the Middle East. Final question for you, Noel. I know you're busy today. You mentioned bolt-on acquisitions in China, for example. So given your footprint right now, city business, what else are you looking to complement in China? A longer-term strategy. What do you want the bank's presence to look like in mainland China?
We really want to grow out. We've got a really strong wealth management business here in Hong Kong. I want an equally strong wealth management capability in mainland China, in Singapore for ASEAN, and in India. And what I really want is a platform of 4 strong pillars of wealth management. And in wealth management, I include insurance, asset management, private banking. And therefore, our acquisitions have tended to be acquiring product or distribution capability in those markets. And that's what we've been doing.
And do we expect any transactions to be announced this year? It sounds like you guys are planning something big.
We will only announce when we're ready. We do not pre-announce.
Okay. When you look at China, just very, very quickly, your expectations on the economy. The recovery's been slow. Do things get better materially this year?
Well, listen, a 5.2% GDP growth last year is not a bad performance. That's a good performance in the first year after recovery. The China economy is going through transition, but I am confident they'll do their around 5% GDP growth this year. And I think we have to realize and focus very much on the medium and long-term opportunity in China. The urbanization that's taken place over the past 2 to 3 decades in China is a strong growth driver of GDP going forward for the next 10 to 20 years. And that's why we're still investing in China, because we see that long-term potential. Transition is taking place. Now is the time to invest, in my view, in China, to be part of that transition and the future growth.